Greetings and salutations. This is a little video I put together to show others my journey on how I am learning the stock market. Tools I have found to be useful after lots of searching and weeding out the non-helpful ones. Keep in mind my ways are not always right and probably not advised by anybody, but that's just how I do things. Alright, gotta get the disclaimer out of the way. All the images I found on Google Images, I don't own them, not unless I indicated that they are my images. I mentioned specific YouTube channels and websites and brokerages in this video. I am not affiliated with any of them. No one is paying me. I just found them to be useful. I am also not a financial advisor. Listening to my opinions and acting on my advice, do it so at your own risk. This video is for entertainment purposes only. I'm not here to sell you anything. I just like to share information and build a community of paying it forward to share useful tools and knowledge. I learned by teaching, so by me putting this video together helped me organize my thoughts and my tools. Also, I'm not confident in the Social Security system for retirement this country currently has, so everybody needs a backup plan. Diversifying, if you will. When I decided I was going to take this journey to learn how to successfully trade and invest, I needed to hone in on why I was so apprehensive, so I know what to focus on and what to overcome. I came up with these 4 different things. They kind of intermingle. First, I didn't know the lingo. Phases like bull versus bear market, short stop limits, options, future trading, all of that. I had no clue what any of those meant. Second, I thought you had to have a lot of money to start investing or trading. These days, you can open a brokerage account for as little as $1 if you wanted to. I didn't know if you needed to take college courses to understand the ins and outs of the stock market. Alright, and these days, everybody knows YouTube and Google. They are your best friend. Lastly, just the fear of the unknown and fear of losing money. This may not necessarily be the first thing you should do, but it's definitely within the top 5. You need to decide on a brokerage account that's going to work for you, your strategy, your goals, things like that. A brokerage account will be the platform you use to trade stocks, to invest in stocks, what have you. These are a few brokerage accounts. It's kind of an old picture because Scottrade is in it, but this is what I found on Google. The reason why it should be in your top 5 is that it does take a couple days for the account to completely set up. And sometimes with the first deposit that you make into it, it may take a couple days also. Most brokerage accounts have education and learning tabs, mini courses to help you learn the ways of the stock market. A lot of brokerage accounts have moved to commission-free and trade-free format, thank goodness. So check with the brokerage account to see if there's any fees, if you have to have a minimum amount in the account. Me, personally, I have 3 of them. It's not really advised to have more than one. There's pros and cons to each way you decide to go. I've watched videos doing different reviews on different brokerages accounts. Webull is a good one to start off with. I do have that one. It doesn't have all the stocks I've wanted to trade as I'm learning, but it does have a great educational tab and different resources, different mini seminars to learn from. Robinhood is also a popular one. I do not have Robinhood. I also have M1 Financing because you have the ability to buy fractional shares. They're one of the few companies that allow you to do that. So say there is a company you really want to invest in, a stock you really want to get, but their price is something that you can't afford. M1 Financing allows you to buy just a fraction of that. So say you only have $10 to buy that stock, you will buy a fraction of whatever $10 can give you for that stock. So example right now, Disney is at $120, $140 right now, and Google is at $1,400. So if you wanted to invest in either of those and you didn't have over $100, with fractional shares, you have the ability to do that. There are also pros and cons to having fractional shares, but that just depends on the strategy that you choose to achieve your goals, if that's the way that you want to go. The third one I have is TD Ameritrade. I was kind of grandfathered into that one. I started off with Scottrade back in 2008, and my account was passed on to TD Ameritrade. So I honestly don't know if there was a fee or anything. I'll have links for all 3 of those below. But make sure you do your own research and decide which one you want to sign up for that works for you. Again, there are tons of YouTube videos and channels doing reviews on different brokers and how to use their platform, whether it's using it as an app on your phone or using it desktop. So the big name brokerage companies will probably have, most of the stocks. Check to see if they have fees or not. And just be aware that once you do a search, for any of these, you will be bombarded with spam, especially on your Facebook account. Thank you, Facebook privacy. All right, you need to educate yourself continuously. I devote at least 30 minutes a day, and I started doing this in February, where I set this goal. Here it is June, and I still consider myself a beginner. I'm still learning just the basics. So I'm not a book reader. I love audiobooks, and I found this book on YouTube. It has been very helpful. Trading for a living. It doesn't necessarily teach you the stock market, but it did get my mind in the right place and give me some good ideas. So there are tons of YouTube channels, but these three I've come to learn quite a bit from. Arva Bella has brokerage reviews, how to use their platforms, different tips on investing. I've learned a lot of beginner steps from her. Then there's Trade Pro Academy and the Boiler Room. So most of their videos are more advanced than the beginner stage that I'm at, but I have still learned a lot from them. All right, then there is this useful tool, Investopedia.com. It's like a dictionary for the stock market as well as articles, but you just type in a word related to the stock market, like you can put in dividends, bull market, things like that, and it'll come up with a definition in relation to the stock market, and it'll also have articles on it. Another thing that I have found helpful is a community page on Facebook called Investing for Beginners. There's tons of Facebook pages. This is just the one that I came across and liked. Again, I'm not affiliated with any of the helpful resources I just mentioned above. They're just tools that I've come to like and that I keep going back to. The audiobook that I referenced, Trading for a Living, suggests keeping notes and logs for everything. I was already doing that, so it confirmed one of my strategies was a good idea. There are pre-made sheets that you can find while doing your internet searches, but I already made my own and I like mine. On the left is an example of notes I take while I'm reading through different posts on Facebook or listening to different videos on YouTube. So I'll just jot them all down. I'll do my own research and I'll decide if I'm going to watch them for a while or if I'm just going to completely ignore them. The top right pick is the spreadsheet I came up with when I am watching stocks. The bottom right I created after watching a stock analysis video by Stock Goodies. This video is easy to follow and he does a great job explaining everything. His other videos are, next level, but I come back to this video a lot. And of course, I'll have a link down below for it. All right, you got your broker, you got your note system ready, you've done your education, and you're going to continue to educate yourself. Now finding the stocks that suit your style of investing and or trading. You can simply Google or any search engine of your choice for, say, dividend stocks, for mutual funds, for ETFs, whatever stock you want to hone in on and research. As I mentioned, Facebook has communities for stocks. Then there is this useful tool. I wish I knew about this a long time ago. Finviz.com. Stock Goodies includes this in his video when he's doing a stock analysis, plus the Boiler Room also has a video on how to use it. For example, say you're only interested in finding a stock that offers a dividend and is under $5 a share. You enter in those parameters and a list populates. It is that easy. Dave Chappelle, hilarious genius, love him. Wu-Tang forever. After you've gotten your feet wet, you need to seriously consider diversifying. A strategy I couldn't recommend more. There are several ways to diversify your portfolio. For example, I trade and invest. I have over 10 different stocks at one time, and they are not all in the same sector. Some are ETFs, some have dividends, some don't have dividends. The reason I say to have stocks in different sectors is, for example, when the real estate market crashed, to keep yourself afloat, if you had stocks in energy, healthcare, technology, entertainment, you wouldn't have completely lost everything. You would have been able to rely on those other sectors to keep you afloat. Other ways that are more advanced in diversifying is having international stocks or trading options, futures, bonds, virtual currency. The big one is Bitcoin. Arva LaBelle also has a video on diversifying investments beyond the stock market. And I believe she goes over, having physical real estate to invest in. There's so many different ways to diversify everything. So as I just went over, diversifying is one strategy. Doing stock analysis to determine if you're going to invest or trade or even drop that stock from your portfolio is another strategy. There is something called a 3-day rule, so make sure you look into that as your strategy. And my way around the 3-day rule is to have multiple brokerage accounts. Another strategy I have is to take a small percentage of my check and transfer that into one of my accounts, rotating between them with each paycheck I get. It's kind of like a 401k. And I cannot stress enough how important it is to take advantage of your employer's 401k if they have one. You are throwing away free money, and it's part of your employer's benefits, so you might as well. Most employers will match up to a certain percentage, like 2 or 4% of what you are putting in already. So you may not be seeing that money now, but when you retire, when you're no longer working for that company, that's when you will see that money. So think of strategies to benefit you and your goals. My goals will probably not be your goals. The way I execute my goals will not be the same way that you will go about achieving yours. That's what makes trading and investing so complex. Nothing is the same for anybody. Here's an example of a tool and simple common sense analysis that I use. I'm an iPhone user, and this app automatically came with the phone. It's connected to Yahoo Finances. Your brokerage account will have a similar setup. Because I'm a little OCD, I have all of the stocks that I'm watching or I have bought in alphabetical order. What you do is you just type in the ticker name of your stock, click on the magnifying glass, the stock comes up. Towards the upper right is a bluish button that says add. Just click on it, it's now on your list. That simple. So it shows you the chart history. You can choose between 1 day to 2 years. So majority of the stocks plummeted during the COVID shutdown. Understandable. But do you see the difference in these two companies? The one on the right is not making a comeback. It is not a strong stock compared to the one on the left. I took these screenshots on the exact same day, just moments apart, and I used a 2-year chart. So I chose these two as a comparison to show you that they were pretty fairly stable stocks prior to the COVID crash. For me, a stable stock is low risk, a good long-term investment. But as crashes do, they weed out the bad companies, the companies that aren't as strong, and make room for new companies. All right, and if you're looking and thinking that a $6 difference, see how it was pretty stable at 8 before the crash and now it's 2, you're like, that's $6. Yeah, but that's per share. Think about if you have 100 shares, 500 shares, 2,000 shares, 20,000 shares. Do the math. That's a huge difference. I bet if I did a stock analysis before the crash, the stock on the right would not have favored as well as the stock on the left. So that's why stock analysis is so important. So here's another example of a spreadsheet I came up with. I removed all the stock names because I'm not trying to push you one way or another. So this is an example of a swing trade that I did. I took advantage of the COVID conditions. I felt that this stock, after doing some research on it, was going to be a good, strong stock and it was going to increase fairly soon. I set a goal of selling that stock once it reached 1.5 times the price I bought it at, which was 8. So what happened right after I bought it? It went down, but only a couple, like $1 or $2. And that's what stocks do. But I held strong. I was not going to deviate from my goal. I gave it a little bit more time. It is so important to be patient. And within a month and a half, the stock reached the goal that I wanted to sell it at, which was 12. And I made $400. Easy as that. I would have made more if I had bought more shares. Later on that day, that stock ended up climbing up to $14. And then the next day it was back down to 8. So I just happened to pick a right goal. I just happened to see it on the right time. And then as part of my strategy, I took that $400 that I just made, reinvested it into different stocks. The next stock on my balance sheet is a stock that I was just playing with. I was still getting my feet wet, still learning how to do things. Kind of did my own little experiment. So with this dividend stock, and it's highly recommended to drip your dividends, and I'll go into that more in the next video. But since I was playing around with this one, I wanted to see if I could make my money back while still having the stock. It was cheap enough, so I bought 200 shares of it. The price went up a little bit after I bought it, so I sold 153 shares. Don't ask me how I came up with that number, I don't know. Then the dividend paid out, so I sold some more shares, 23 of them. Now, with the current price that it is, all I have to do is sell 14 of my remaining 24 shares and I will break even. I will have lost nothing. And I still have 10 shares to collect dividends on. And then one day, maybe sell it to collect more money on if it goes up even higher. Don't get me wrong, I've lost money. When I first started out in 2008, I did no research. I was just going off what somebody told me, and I lost $1,000 right off the bat. So I'm working my way towards earning that back and then also funding my retirement account. So just make wise choices. Be aware that you could lose money in the stock market. Right now, I just happen to be making money. Have reasonable goals and be real. You're not going to be hella rich like Leo DiCaprio was in that movie, which he should have won an Oscar for anyways. Wolves of Wall Street. You're not going to be like Mark Cuban. That was a once-in-a-lifetime situation, and that's why you hear about them. Just like you only hear about the one plane crash, that happens after thousands and thousands of planes take off every day. Remember, the government will take their share if you withdraw your profits prior to the age of 59 and a half. This takes time and effort. If you don't have the time and effort to put into this, you may not be as successful. Like I said earlier, I spend at least 30 minutes a day. Whether it be listening to stock-related videos or doing stock analysis, I'm learning some way every day for at least 30 minutes. Whatever your goal is, don't make excuses to deviate from them. Set a reasonable goal and stick with it. All right, so to recap, you need to do your due diligence. You need to keep educating yourself. You need to do your own research and stay disciplined with your goals. I highly believe in pay it forward. Sharing information is helping your neighbor. Gives you a small sense of purpose in this crazy world, I think. So hopefully I was able to decrease the fears that you may have, answering some questions that you may have, set you in the right direction with some resources that I found useful that is out there. So go to Investopedia.com, learn about some of these terms that I use that you may not be familiar with. Mutual funds, bull bear market, ETFs. Watch different videos and figure out if stop buy limit will benefit you and your strategies. All right, everybody. Have a great day. Cheers. I'm off to make my next video on dividends.